Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, October the 27th. Well, a change of character for the market today, and we have a very small bodied green candle today. Now the green candle means that the buyers or the bulls have made some net bullish progress on the day between the open and close, but it's been a very small amount when compared to the two previous days. So there's some sort of a warning that the first time frame uptrend that the market is in is not healthy. Now the market is still in the first time frame uptrend with a higher high and a higher low. The market has found resistance at the Tenkan-sen, at the Kijun-sen, which is the pink line here. The Kijun-sen tells us something about the momentum in the market, and when it's pointing sideways, it's basically telling us that the market is moving into equilibrium, that the market is losing the momentum that it had previously, or that it's lacking momentum. And we know that markets move from equilibrium, as we've seen here, to disequilibrium when it moves away from the Kijun-sen and Tenkan-sen and moves back to equilibrium, and markets will mean revert. And we can see how this market here has been trading around the Kijun-sen and Tenkan-sen, then trading away from it, trading back to the Kijun-sen, then trading away from it, and now trading back to the Kijun-sen. So when the market trades back to the Kijun-sen, we need to be aware that eventually the market will trade away from it, and markets tend to move in that type of cycle where there'll be a market in equilibrium and then it'll move to a disequilibrium, or it'll move from a congestion phase to a trending phase. And there are other methods that we can use to identify that. We can look at the volatility in the market, and the market will move from a high volatile situation to a low volatile situation. And the low volatile situations will make us aware that the market is in effect relaxing at the moment. And as a trader, we can be prepared to take the opportunity to take a trade in a market that will become volatile. So here, a similar situation when the market is at equilibrium. We need to be aware that the market will move to disequilibrium fairly shortly. Now, the market is trading below the cloud or the Kumo, and that means that the market has an overall negative bias, that it's bearish. The market is trading at the Kijun-sen, which is the pink line again, which is telling us that the market is fairly neutral in that medium-term time frame, and the market is trading up above the Tenkan-sen, which means in the very short time frame the market is bullish. So we're getting conflicting signals here. Overall, though, the market is bearish because it's trading down below the cloud or the Kumo, but conflicting signals because we're getting this retracement back towards the cloud or the Kumo. So what we need to do here is keep an eye on the high of the current candle. If the high of the current candle is taken out, then we need to look to some of the swing highs here, roughly about 76.67, and then at around the cloud or the Kumo at 77, and look for potential areas of resistance around there. Look for the short-term dynamics to become bearish again, for the market to sell off again if it does react around those levels. There will be potential resistance all the way through the cloud or the Kumo here. There could be a sell-off from this area here where the market's trading at the moment, so we need to keep an eye on the low of the current candle for a potential lower high and a lower low, for a reversal of the trend in the first time frame to the downside. And that's what tends to happen when the market is attracted back up towards the flat Kijun-sen. And we do have signs here already that there is potential for a change of trend to the downside in the first time frame, and that's basically because of the small body of the current candle. The long shadow on the bottom of the current candle doesn't make me particularly think that there's a really strong possibility of a reversal, because that was buying coming into this market as the market tried to sell off. So even though this is similar to a hanging man type pattern, it's not a terribly strong pattern because of that long shadow and the potential, the buying that came in, and potentially telling us that even though it's a small-bodied candle, the buyers are still showing some strength here. So the high and the low of the current candle are very important for this market over the next few days.